and that's why I like using it so much. So what you're going to see today is based on our artificial intelligence engine with chart patterns. And like I say, I always like to do two things for people. I want to show you that and what it does. I think it's fantastic. But also we'll look at the chart patterns themselves and how you can predict moves from them. And so let's just dive right in here. And Greg, we've got plenty of time, so no issues. Now, the first thing I want to say is that I'm going to be covering a lot of material, talking kind of fast about the different patterns and the targets that they generate, how the good ones, the bad ones, all that stuff. So this book that's on our website has this information. It's much more detailed. It's a fairly long ebook. So if you'll go to fulgent.ai/MetaStock, you can download that book. Of course, it's free. And that'll really help you with a lot of the information I'm going to talk about today. It has a lot of good examples in it. And you may be wondering, well, where does Fulgent come in? Because I told you my company is Grabana Systems. Well, what happened was several years ago, we have this artificial intelligence engine, and I was talking to Jeffrey Gibby over there at MetaStock. Of course, we have this long relationship going way back to the 90s, providing utilities and things for MetaStock users, and talked about providing our artificial intelligence to MetaStock. So we formed this little company to sort of make our AI accessible in other platforms. MetaStock was the first one, and frankly, the best one. It's great. So we created this engine that runs in the background on the computer, and it plugs right into MetaStock. So that's Fulgent.ai is that company focused on providing our AI to the world. So that's where that ties in. Okay, so getting back to patterns. And there's the download link. Yes, click that to download it. I always forget I put that in there. All right, so let's talk about what a pattern is. And the most interesting thing to me about these, and I've been studying them my whole life, really, for 30 years. And they do two things. They both reflect the psychology of a market, and they create the behavior of the market. You think about, a support level. When a price approaches a support level that has been maintained over a number of points, the market sees that. And it used to be back in the 90s, even 80s, back there, I was in graduate school, finance class, and in that class, the instructor said, well, technical analysis is just hocus pocus, it doesn't work. And of course, then he started talking about support levels in charts. So that was kind of interesting. But there was a lot of debate about this. And a couple of guys at MIT did a paper, I think it was their thesis, where they actually looked at a number of these patterns over a long period of time and rigorously proved among things like head and shoulders and triangle tops and bottoms and all that stuff, that the results showed that the technical patterns occurred far more frequently than if they were truly random events, and that they definitely contained useful information about prices. So that was a landmark study. McKinley and Lowe are the two gentlemen. You can look that up online and find that paper. It is really quite amazing. But that was the first thing that I ever saw where they proved that things like this work. So that's significant. The question that people ask me often about this is, so which pattern are you really looking for to have like a lead pipe cinch, aces, straights, and flushes? Sorry, it's going to make money no matter what. And the thing is, there are so many patterns out there, and a lot of it depends on how the pattern is formed. The most important thing is, does the market see it? Like we talked about support levels, the market sees those. When price approaches a support level, it's going to react to it. The same for all these patterns, so volume patterns, consolidations. And so you're looking for the ones that are clearly visible to the market is the big thing. But we're going to talk about all these different kinds of patterns that I've marked on the S&P 500. Ironically, I gave this webinar like right at the beginning of March for MetaStock, and we're talking about this volume climax pattern predicting a reversal right there. And of course, next week it did. But anyway, that was kind of fun. But so these things are very predictive. They work really well. And what we're going to do is look at 7 of them today. We're going to go through each of the 7 and talk about the derivatives of those 7. My objective, as I say, is to help you see them, pick them out, easily trade them. There's a book I wrote that's available out there in, I think, Trader's Library. Wrote it a long time ago, I think 89 or somewhere around there. And it's called The 7 Chart Patterns That Consistently Make Money, where I talk about these. We're going to talk about those same 7 patterns today. and actually cover a lot more information. This is a very short book. It's like a pamphlet almost, but a lot more information, and that ebook has a lot more than this little book has. But been at this a long time, and so in the webinar, we're going to be looking at these 7 primary patterns, and each one, the little letters after these are how they appear in the software. When you look at the patterns in MetaStock, those initials are shown on the chart, so that's why they're there. But trendline break and reversal, support resistance break and reversal, consolidations, volume climaxes and volume trend, Fibonacci retracements, price gaps, and saucers. These 7 form the essence of pretty much every pattern ever discovered by anybody. If you take things like a head and shoulders or a top and bottom or a cup and handle, those are derivatives of the other patterns. Tops and bottoms are just support levels. A cup and handle is just a saucer with a consolidation at the end of it. So these are combinations, patterns. Head and shoulders, of course, is a trend line break on the right shoulder. So we won't be getting into those, but they are contained within these top 7. Okay, so let's start by looking at trend line break and reversal. And this here's your trend line formed across these lows. The thing is, if it's clear, if that's a very obvious line, when it is broken, the market does see it, does react to it. Usually you will have a return to the trend line, which I call the kiss of death, in this case, going down, because when you return to that trend line and start down again, ooh la la, baby cakes, that is a good signal. You want to short that sucker right there and put your stop right above that line, because those things will fall like a rock. Really, really good confirmed signal. The same for the other side, which is if you're going down, you break an obvious trend line, you come back and touch it and start coming up again, that is launch pad. It's going to go like 90% of the time. So those are really important. Then you have the reversals, a little more subtle, a little harder to trade, because you have to kind of pick them when they're pretty close to the line, and they can, break through the line right there. So it's pretty tight stops on them. But these also can become very obvious in charts that are clear, not a lot of volatility, something that really shows that formation. So what I would normally do, when I have done in the past on my chart pattern webinars, is I would launch into 20 examples right now on slides. That's kind of boring. We don't want to do that. What we're going to do is we're going to go right into MetaStock. First, I have to log into this machine. And there we go. Voila. We have Apple in MetaStock. And what I can do, because I have a chart pattern engine, is I can actually use my engine to show you when I'm on each of these patterns what's going on. So let's go ahead and bring it up here. And that also gives me a chance to demonstrate it to you, of course. So Fulgent AI, and notice that it is in the menu. Now, I'll tell you, the MetaStock folks are really good helping us get this working right. And I love this implementation. It is so clean. So if I go to Fulgent AI, I have several Fulgent AI products in here because we have multiple things available, but you can see FT patterns right there. If I double click that, it comes up with all the patterns that we're tracking. So what we're going to do is turn on trendline breaks and trendline reversals. And there's lots more going on here. I'm going to get to kind of what this stuff does at the end of the webinar, but we're just going to go through these one by one. So I'm going to close that, and I'm going to refresh the chart. Okay, and bingo, there we go. All right, and now what I want to do is show the expert commentary. Because if I click near any of these signals, it'll tell me what the pattern is and how it's traded most effectively. And you can do that within about 3 or 4 bars of any signal you see. Okay, so let's look at this real quick. Let's look at that first signal right there, that trend line break that is shown. And what all of these are trying to do is they're showing you where the software sees, and I do a little software sidestep here because it's important that I tell you this. It's where it sees the condition for the pattern. And so what you do as a user of this is you look at it and you say, is the pattern obvious? Is it clear that the pattern is there? And so in this case, if I go over to this line drawing thing over here, and I draw a line across those highs, I can see that the trend line break that was shown there is really a good trend line break. In fact, look at this. Remember I talked about coming back and touching it? Right there, if I draw this a little bit more carefully across those highs, you you can see that it did exactly that. It came down, touched that trend line, and went into launch mode. So very, very important to see that. If I go to the right now again, so a lot of these, you're going to see, some that did not follow through. So the magic of this, the beauty of it, is that the software will find every place it sees one, and then you look at it and say, yes, that's a good one. Here's a trend line reversal right here to the upside, found right there. And that's from a line that goes below the chart. So like across here like this. And it says, yep, we've got a reversal off that line. We've got another one here. This one happens to be formed across here. All right, there you go. This color coding is showing the area from which the pattern is generated. And again, the MetaStock folks helped us to get this right. So every pattern has a color. In this case, a trend line reversal is blue, and trend line break is going to be this magenta color. So it makes it easy to see where the pattern formed in the data. Here's a really nice trend line break right here. Look at this one. So we're going across these lows, and I think that's a pretty obvious break to the market, don't you? I mean, it is volatile, but there's a pretty solid, and especially in this zone right here. It tried to come back, almost did a kiss of death touch, and then it's down, down, down. Okay, so, that's fantastic. Let's do another line across these right here. There's a trend line break. Okay, now a little bit going back to the software for just a second. There is a feature in the software where you can only show the best patterns. Right now, I have it set to show all of them because I'm only turning one on at a time, and I want to see all of them. But there is a way that the software can identify the best trendline breaks, the best trendline reversals. So hold that thought. I want to show that at the end of the presentation of the patterns. But so we're going to see some that are kind of okay, but all of them can be used the way I'm saying. In fact, visually on a chart, you can do exactly what I'm talking about. Draw these lines. Is the break obvious? Yes. Trade it. Put your stop right at the start of the pattern, right there. Okay, so that is just the first one, the trend line break and reversal. Going back out a little bit here. And let's look at the next one. So we have 7 to go through here. And hopefully I'm giving you some information that is useful to you that you haven't heard before. That's the idea of this. So support resistance, breaks, reversals. And of course, a support level is really just a horizontal trend line, right? It's going across points in a chart. But they're much more significant to the market. The market sees support levels and resistance levels so much easier than trend lines. So when you break them hard on volume, oh yeah, especially if you do the kiss of death, you come back and touch it and start going down again. Yeah, that's a great short. You touch it and go back up again. That's a great long. So here's the breaks, which are very, very tradable. One of my favorite patterns, especially in the short-term time frame. And the software does all 3 time frames as well. And I'm going to show that to you too at the end of this. Short, long, and medium, short, medium, and long term. But and let me just clarify that. Short term meaning like 3 to 5 bars. Very short term patterns. Medium term about 15 bars. Long term about 30 bars. Reversals are very similar to trend line reversals. You're coming up to a resistance level. Actually, I traded one of these this morning. I was real happy about in the real-time market. And the market sees that over there, sees that resistance level was not, you didn't go through there. So you come back up to it and starts to fail. You can just take that short right there and put your stop right above it. And if you get stopped out, watch it. It may form another pattern, it may form a consolidation there. That's a very important zone to trade on. The same for support. Also, very, very similar opportunity, like right here on the right in this chart. Well, let's go back to MetaStock and go into our tool here, Fulgent AI, and let's turn on these guys. So here's trendline break. And you may be wondering why I just turn them all on. Well, because we'll have patterns everywhere. So we need to isolate them to do this. Okay, so there you go. You can see it's very easy to use. You just turn that on and refresh chart so it can call our tool, which is running in the tray, and say, all right, what do you got here? Okay, so here's support resistance, reversals, and breaks. And again, what it's doing is it's finding the places where it sees the right stuff for a break or reversal. And I've got a couple of really good examples here. Here's this resistance level over here. You find the horizontal line. Yep, right there. Nice move. Nice move. That was about a 7-8% move from that reversal down to where it petered out down here, and you would take profits. Here is a break over here on the right. See that resistance level? We broke through it right there, very strong. Now this one didn't follow through. It was a good opportunity. Here's a resistance level over here that it's looking at, and sometimes they don't. Sometimes they keep going. But what you can do with the software is find hundreds of these any given day and just cherry pick the best ones. You know, the ones that are usually you want to do the ones that are already kind of following through. The software will identify them the second it sees the condition. Like it's seeing that resistance level right there. So you see where that arrow's firing? It's like right at it. It doesn't wait till up here somewhere. Say, oh yeah, it broke through. It's telling you, no, it's right there. And you've got that condition. Okay, so now I'm gonna have to delete some of these lines because they're going to fill this chart. Now, the other thing we can do, however, is look at a couple of other charts, and we don't have a whole lot of time here, but I think we've got plenty. Do this. I can go to the right to, let's see what's the next chart here. Amgen, and you can see, I mean, you know, look at these. I mean, it just doesn't get much better. This chart is really good on these patterns. It's incredibly good. And the green is the reversals. The
Ed?
Gold color, yes. Shoot.
I'm sorry, I was on the wrong input today. I'll tell you. I can't remember what I was going to tell you. Just FYI, if you have any, want to take a moment for questions, there are people on YouTube that do have some questions. I can give them to you. Just tell me when you're ready for that. And two, we've reconnected the studio, so David will be doing this close. So when you're ready, just going to pass it back over to David, and he'll be closing out the
okay.
presentation. Thank you, sir.
You got it. So on the questions, there's 7 of these to go through, and then I've got to show the Explorer and all that. So I'd rather wait till the end, if that's okay, if you can hold on to them.
I wasn't sure. I beg your pardon. You know, when Jeff leaves, this place just falls apart. We don't know what to do around
here. You're doing great, man. You're great. You're great. Don't worry about it.
Thanks, Ed.
So yeah, we're on pattern 2. We've got 5 more to do, and so you know, I think we'll have a good 10 minutes for questions at the end of this. And that should be fine. Even with it, it's fine. I mean, I can stretch or compress the time. It's real easy. So, okay. But thank you for offering that. And I do want to answer those questions. I really do. So let's go to the next one here. You saw what that was. And next one is, oh yeah, I love these things. Saucers, dynamite. The opposite of a saucer is a rounded top. And we saw one of those, I think, in the other chart. No, that was my live trade. So I'm getting my head confused. I was trading this morning. Okay, so yeah, I saw a really nice one this morning. But so saucers are these very smooth curves. And the reason they're significant is the market sees that curvature. Your human eye just picks it up. It looks like a saucer. It looks like price is going from a dropping motion to a accelerating to the upside. The place you try to trade it is breaking through the high that was recently formed on one of these little moves up and down. So that little high right there, you're breaking through there. That's where you do it. And the minimum you expect to make is about halfway of the prior move. They'll usually go a lot further than that, but that's kind of where you sort of look to get out on a profit side. And it's like I say, rounded tops are really, really powerful. So let's go back over here and we'll just peruse through a couple charts again. So let me go back to Fulgent and say, okay, dude, show me the saucer, show me the beef. Where is it? Where's the beef? So you turn those off and we'll do saucers. They're down here, pattern number 509. And the numbers have a reason. We should talk about it in a minute. Okay, so refresh and show me. Whoop. Okay, now you can see very similar accuracy on these. Here's a rounded top that was found here, another one here. Look at that. Another one here to the upside. This one, it thinks it sees one, it doesn't. So that one is a bogey. But you can, if you came to this pattern and saw that, you'd say, well, yeah, you think you see that curvature, but you kind of missed the gap there. So no, I'm not gonna trade that one. But these others are great. Look at this curvature to the upside there, to the downside for a nice little move there. Let's go look at another chart for fun. I'll go to the right, and this American Express. I still got my trend lines from the last time I did this, but you can see those beautiful patterns. Well, if I can grab it, there you go. Forming, and there's, I think pretty much every one of those is profitable as far as I can tell. Yep, at least for a short distance, those are all very short-term saucers. The ones that are great are the long-term ones, but I haven't seen any in these charts, and we could go looking for them, but we need 4 more patterns to go through. So, but you get the idea. Rounded tops or bottoms form the pattern. Okay, we're going to go back. I kind of like this Amgen chart, so we're going to go back to that. All right, let's go and look at our presentation again and go to pattern number 4, which is Fibonacci retracement, an amazing pattern. And I met a gentleman at a webinar. I always tell this story because I think he was 84, 85 years old, but he was just as spry as a spring chicken, man. He ran up to me and said, Ed, I got to tell you, your Fibonacci retracement, that's all I trade. And I've been doing it for years. I make a great living in my retirement. And he was just happy as punch with that. But so I've met one person who said this is all they trade. So obviously a very good pattern. Nobody really knows why it works. We just know we see these kinds of moves in nature. Human beings are susceptible to them for some reason, but we know they do work. So, all right. So Fibonacci retracement, 50% retracement. These are the key ones. There's others. These are the keys. 50%, 38%, or 62%, which is also 1/2, 3/8, 5/8. So it's about eighths. Okay, let's go and go back to our little engine here and say, okay, we want to see some of those guys. Let me go in here, saucers and fibs. Oh yeah, there we go. Turn those things on. Okay, and let's refresh the chart and see if we have any on Amgen. Okay, so again, it is going to show the signal where it sees the retracement. So here, this is a 62% retracement of that move. It did not continue down. This one, however, was a 62% retracement of this move, and that was a great signal. Let's go and go back to the left here. The other thing about these is you kind of want to tend to find the smoother charts. These are pretty volatile. Apple, let me go forward a couple of these because, again, the market needs to see it. For it to work, it needs to be pretty obvious. This one's a 50% of this prior move here. This one is it looks like a 38% of this move. You can see the color coding. That's how I know to go back to this low. So right there, 38% was a dynamite signal. So, and again, if we went through charts, you would see it. The smoother this chart is, the smoother the attack to the level is, the more likely the market is going to perceive that subconsciously and trade it. So kind of an arcane pattern, but it does work really well. Okay. And I know MetaStock has some tools here, some drawing tools that help you identify Fibonacci retracements. Such amazing software. I love working with it. It's so cool. Okay, so MetaStock. Okay, the next one is also a very powerful pattern. Well, they're all good, but there's an item in here that I want to really tell you about, and it has to do with this measured gap pattern here. But let's talk about all three. The first is a breakaway gap. That's where you have a low point in a chart and you break away. What you're looking for is something unusual. There can't be gaps everywhere. It's got to be like it's suddenly 4% gap. When the rest of the chart has like maybe little 0.5% or that kind of thing. Looking for something that shows massive demand coming into the stock from below. Those are very tradable. You put your stop somewhere in the middle of that gap, and I'll tell you why in a second. The other is the exhaustion gap, which is you've got a long move. It moves, gaps down at the end, and it turns around. Well, that means the selling pressure is exhausted. It's gone. It takes very little to move this chart up. So you'd buy into the gap and then set your stop right below that level right there. The interesting one is the measured gap, because if you have a move, pretty decent move, and you get a gap, the probability is very high, like 80%, that the chart is going to go twice that distance. From here to here, it's going to go up to here. So that's why it's called a measured gap. And we have 3 measured move patterns. This is the first one that we're talking about today. There are 2 others, and I'll tell you what they are when we get to them. But very powerful. Let's go ahead and look at our chart here. And not seeing too many gaps here. The other thing that is happening with Fulgent is it is looking at a database of all these patterns to figure out which ones to display, like which ones appear to be reasonable. So sometimes it will miss one that you see with your eye, but usually it picks them up. So let's look here. Okay. So most of these are short-term gaps. I can go back here and look at them, but you can see this is a breakaway gap here. Here is a measured gap. It's a beautiful example. Look at this. Because if I were to take the retracement tool over here, which I think is this one, or this one actually, and draw it. Let's see. So, no, that's actually the wrong tool. Hold on. Okay, there we go. There we go. There's your 0. Okay, I need to come back up with this. All right. Is that right? No. Okay, I picked up the wrong tool. Sorry. I think I wanted this one up here. Yes, let me try that instead. Well, no, okay. I have not done that in a while. It's over here. I'm not going to worry about it. I can just tell you. So if I were to draw a scale across here, you would see that that is halfway between this point and this point down here. So there's here's another measured gap here. Here's a breakaway gap, a measured gap predicting, this move here. And we can look at a couple more charts. Okay. All right. So here's a breakaway gap here, a breakaway gap here, a breakaway gap here. This one is an exhaustion gap, and it doesn't tell you which one it is, but you broke away. You're coming back into the gap. That's a short signal, even though it labeled that as a measured gap or a breakaway gap. It is, in fact, an exhaustion gap because it turned around. And that's the thing about measured gaps is you never know what it is until a few bars later. It's got to keep going. If it does keep going, then it's probably going to go to twice the distance. But if it turns around back into the gap, it's probably going to fail. Okay. All right, I think we have 2 more here. Let me see. I believe that's right. Yes, 2 more to talk about, and we'll be set. So this one, I love this pattern. I actually think I discovered this back in like 1992, but it has to do with what happens with volume and moves. When a move is going down, the chart's going down very hard, and volume rises to meet it's increasing. Then volume kind of dries up. It goes the other way, and the chart turns around. That is very likely what we call a volume climax pattern, and the chart will take off from there. What's happened is the buying and selling pressure has completely gone away. Now it takes very little buying to move that up, and that's why it moves. If, on the other hand, you're screaming down like this, volume rises, backs off, and it keeps going, that's our second measured move pattern, because that's a volume trend, and it's likely halfway of this total move, right? Halfway. So let's go ahead and take a look at that real quick. And go back in here to patterns and look at the volume pattern right there. All right. And you can start seeing this is a very nice volume climax example the other way. So the chart's going up, up, up. We have a volume event down here. There's volume coming into the chart right there, kind of backs off. And so it says, yeah, you've got a reversal with that little hat pattern on volume. And so that's a great volume climax. This one, they don't go very far, but they are reasonable patterns as well. Let's go see if we can find some on the other charts we've been looking at here. And let's see. So this is a good one here. And the thing is, like I say, when you're looking at these from the software, you would expect to see some little follow through. It doesn't do that. So that means it thought this was a volume climax, but actually it's a volume trend because it continues going up. So that's halfway from here to where it reaches, right? That's halfway. So that actually is a volume trend signal. Here's a good volume climax here with the volume coming up. And let's see, we'll look at a couple more actually. Yeah, it's going to Walmart. Okay, so here's you can see several good examples in here. Here's a nice one, a pretty good one here. There's one here, one here. Volume trend, it thought it was a volume climax, it wasn't. But so that gives you just some examples to look at. But again, you want to see that volume like here, rising to meet the downturn and then backing off, which is what happens right there in that chart. And then it'll, it's pretty easy for it to go up from there. This is a better one because there's really a lot of volume and then it's backing off, and that's right where that occurs. Okay, we have one more to talk about, and that's consolidations. Amazing patterns. There's all kinds of them: flags, wedges, rectangles, ascending, descending triangles. They're basically trading ranges, and it's a place where buyers and sellers are duking it out, pushing the market both direction with supply and demand. And finally, one side wins. And typically this is the third measured move pattern, because typically a consolidation is the halfway point of the total move. So you go back to where you start, you have the sideways motion, it will typically go double that distance. That's the third measured move pattern. You can also have failures. So you go up into a consolidation, it goes sideways and it fails. It falls out the bottom. Those are very good short candidates, like in this case. So you see both. The long candidates, or the ones like that I'm showing you, which are continuation patterns, are more tradable. They have good targets. The failures are less so, but they are good opportunities for a move. So again, we'll do this on Walmart here. We have up, so go into patterns and consolidations. There we are. Okay. And refresh chart. Let's see what you got. All right. So this one, okay, so it'll fire the signal either way, either to the upside or the downside. And if I look at this chart, I just don't really see any clear form consolidations. It's trying to show me every range that it sees. Let's see if we can find a better example. Just going to the right here. Well, I think Apple's next. Yeah. So pretty decent. There's a little range formed right here. Another failure down. So a lot, like I've been noticing this in the recent charts, it seems like the market is not showing us as many clear, up, sideways, up kinds of patterns. They just are not as prevalent, and I'm not sure why, but it's showing us all of the, everything that it can see in terms of a range breaking out, to the upside or downside. And again, so it brings it to your attention. You look at it and decide, is that a good move? In this case, even right here, or this case, I see the range forming a very strong breakout out of the range to the upside. That's great, because I came up from here, sideways, broke out at the top. This one sideways down through the bottom of that consolidation. That's very, of course, that was, the pandemic decline there, but yeah, so pretty big deal. Okay, so let me go ahead now and go back. And very quickly, we're going to go to the software here because I want to show you just a few more things about it, and it won't take me long because it's so automated and with the one control panel. Let me go back to, I think, what's this? American Express, Amgen. Yeah, we'll stay on Amgen for this. What I can do is go in here. Remember I mentioned that the software is able to isolate the best patterns. And the way it does that is with these little controls down here. I want to show that to you, but first I want to turn all the patterns back on. So enable all, they're all on. Let's click OK, close and refresh, and voila, patterns everywhere. Okay, that's all the patterns it sees. So what I can do now is go into that interface again and move this little slider up to, let's say, 75% rating on the signals, because it's using a database looking at things like, how many points on a trend line, what's the volatility around the trend line, what is the angle of it. It has all these data points to try to isolate the best ones. And that's for each of the patterns. So if I'm on 75 rating, if I close that and refresh, you'll see that most of these will go away. And the ones that it leaves behind are generally going to be nicely profitable. So that's what that does. The other thing, and I'd love to go look at charts, but we're going to run out here. So the other thing that you can do with this is isolate different time frames. So you see short, medium, and long. And what I can do is say, let's just look at all the short-term patterns. So I'm going to turn all those on, turn the mediums off, and turn the longs off, long-terms off. So short-term is the only thing on. And now I will do it again. And as you use this tool, you're going to specialize. You're going to see, I really like those short-term, trend line reversals, and actually the short-term patterns are my favorite. You can see just looking at this chart how good they are. Pretty much, I mean, up, down right there, up right there. They're really good. So, but as you use this, you'll specialize. You'll say, well, I kind of like these patterns. I'm not too favorable to these particular ones, whatever, and you'll just customize it. There is a restore to defaults right here that I can do. You want to restore defaults? Yes, I do. And we chose these by looking at different patterns and tried to pick the best selection. But that is the defaults, and then they will show up. Okay, so boom. Again, that's everything. So come back in here. Oh, but I've got my strength rating. Yeah, is up really high. So let me set that back down to where it was, show all the patterns. Okay. And now show all the patterns, not just the really super good ones. Okay. But again, you look at it, and if you want more signals, more pattern signals, you wouldn't do that. You wouldn't go to high accuracy. You'd look at more patterns and then look at them. Does the market see it? It's finding it, but does the market see the pattern? Okay. One more thing I want to show you, and then I can take questions, and happy to do that. And that is this really cool thing. I love this feature of MetaStock. It is so powerful. The fact that you can scan the entire stock market for a particular signal, particular event. And so we have used that to be able to identify all of the patterns that it sees on any market. So if I go to the Explorer here and go down and say, alrighty, let's go up here and turn on our Fulgent Explorer, which is a little more down here, FO, there it is. So it is this one. Now, we also have other explorations for each of the individual patterns. So if you really like those gaps, you can just search for those. And the reason you'd want to do that is the tool can only find one pattern in a spot at a time. We have 3 bars that we allow. So within 3 bars, it's not going to find another pattern. So it could mask a really good trendline break, or one pattern on top of another pattern. So if you really want some particular pattern, this enables you to find just those, and it's pretty effective. This one is just find all of them. And I'm going to go down here and say, okay, let's go down to the S&P 500. Oh, it's already collect. Okay. And I'm going to make this date. Well, it's got 7/21. I'm just going to leave it where it is and say start exploration. The reason I want to show this to you is the sucker is looking for all 7 of those patterns, all 3 time frames, over 500 stocks, and it's going to finish this in about the time I can finish my sentence talking about how cool MetaStock is, that it's got this feature. And at the end of it, it's going to show me every pattern it sees for July 21st, which is the date I had in there. So let's go and let that finish. Almost done. It's getting there. Pretty close. Let's see. Yep. All right, another few seconds. And I could scan the whole market, obviously. I'm just looking at the S&P 500. So here we are. So if I want my long patterns, I double click on the long, and here they are right here, all of these guys. Which patterns are they? Which patterns is it seeing? Well, there's a code over here, this ID. So each of the patterns is numbered. There's a 504 pattern, 505, 501, 502. I didn't memorize them, but anyway, we have a table in the manual, which is very robust, good manual that tells you what they are. And of course, you double click them and then go to the chart and see the pattern on the right edge. And there you go. So pretty easy. MetaStock makes it easy. The other thing that we do that's a little unusual is this in long and in short column, because we let the patterns live, quote, live for 3 bars. Often, a lot of people want to have a pattern a little better confirmed. Like, yes, I want to get gaps, but I want to see a couple bars after the gap still where the pattern's there, because I want to see something that's moving away from the gap. So these in long trades are within 3 bars. They're not today, but they're like up to 3 bars ago. So that's another tactic, is to get things that are already confirming themselves. They've already moved some, right? The market has to see it. So that's why we provided this. Okay. So again, I love MetaStock, working with this, and we have of course implemented this chart pattern stuff in our software, but honestly, this is a better implementation than even we've done in our software. Just how easy it is to use, how configurable it is. It's just right there in that one dashboard. So I'm super, super proud of it, obviously. And thanks for letting me demonstrate it to you, because it's fun. I have a couple little tiny things. I'm just going to hit these really quickly. My favorite patterns are support breaks, saucers, volume climaxes, and consolidations. I think those are the most predictive patterns. That's one. So support, saucer, volume climax, consolidations are the ones that I tend to gravitate to. You want low volatility, not high volatility trading this stuff, because you'll get stopped out too quickly. It's kind of obvious. So that's what this is talking about. And you want to try to trade in the direction of the market if you can. So this is my market chart with all those patterns on it. So try to get something that's breaking out of resistance if you're going long, or a consolidation pattern on the market or something that will definitely give you a leg up on any trade that you do. The last thing is that you can use patterns to confirm other stuff you have. MetaStock, they have a lot of plugins, a lot of modules from all these great people. Watching these webinars, I'm always amazed at what people have built for MetaStock. Whatever it is, I've just got a signal here on an RSI crossover. If you confirm that with the existence of a pattern, you're much more likely to get a move than just the signal itself. It's just a great confirmation thing, even if you have some other plugin that you really like from MetaStock, and there's a lot of them. So that's another great use for it, is as a confirmer for existing signals. All right. So that is it. Now, David, I can read the input questions here typed in. Happy to do that. Give you a chance to jump in if you want to. We got some time here. Let's see. I'll go ahead and start with this. So John is asking, don't you have to marry the chart patterns with what the market is doing for them to be powerful? Yes, that was my go with the market direction deal. Yes, you want to trade in the direction of the market if you can. So I think you asked that quite a while back in the webinar, but thank you for bringing that up. Again, that's really important. Let's see. Is this recorded to view later? Yes, I know they recorded it. Hopefully the technical issues didn't damage the recording. I don't think so, but they record all their webinars. If you go look for MetaStock patterns, you will find others that I've done for MetaStock. I've probably done 4 or 5, 6 of them. So there's that as well on YouTube. So just MetaStock patterns, you'll find it. Let's see. Okay, how can you determine between the false and the real breakouts? You can't. I mean, so the trick to that is you get the breakout, as long as it's not too big, what you're going to do is put your stop right below that support level or below the trend line. And, some percent of your trades are not going to work out. But if it's a powerful break, if the market sees it and follows through on it, they'll typically move much further than that little stop level. Plus, a trend line break or a resistance break can easily turn into a consolidation. So you might want to watch that chart for a while and see if it goes sideways right there. So, but you can't tell, 100% whether something is going to follow through. It's a probability game. That's what trading is. But you place your bet, reasonable tight stop, and as long as your accuracy is high, which is what we're talking about here, you'll come out ahead. Let's see. Oh, good one, Ryan. Thank you for asking this. Can the signals be used on intraday charts? Absolutely. Can they be used on futures contracts? You betcha. In fact, futures are some of the best charts to trade because they cannot be manipulated quite as easily as stocks. And actually, they're very hard to manipulate. You have to corner the market, So anyway, yes, absolutely. Real time, I use these in real time. Like I said, I was trading this morning, and I always use chart patterns on anything I'm doing. Always, because it's psychology. It's what the market sees. Let's see. All right. And asking about strategies, right? Says, are there strategies? So because of the nature of chart patterns, we developed this tool not as a system, like you trade it and there's an exit that tells you when to get out. It is an art. You see the pattern, you ask yourself, does the market see it? And if it looks strong, like it's really well formed, it's a great opportunity. Once you start putting exits on things and all that, then you've kind of taken away from the fluidity of that and the opportunity to the user, and people want to just follow the signal and the exit. They'll do better. You'll do better if you prospect with these things and isolate the ones that look really clear from a psychological perspective. So that is why we're really focused on providing the pattern points, like where they are. Let's see. Okay, so Mustafa, good to see you on there, was asking, he saw in the interface there's a thing called continuous training. And so I'll just very quickly, there is because this is AI, we have AI packages for trading stocks, and MetaStock has these available that you can retrain on the AI. And that's what this is for. It doesn't apply to chart patterns because there is no training on chart patterns. We've already done that. Millions of data points. We trained them, they're done. so you can't retrain them. But these are the things that we have, and you can look on Fulgent.ai and see what those are. You can retrain. So that's, thanks for asking about that. You picked that up off that little dialogue. That's pretty cool. That's good. Okay, that's the last question I see. So I don't know if you have any others out there.
Yeah,
Greg?
Ed, can you hear me?
I can.
Yeah, there's a few questions on YouTube if you have a moment.
Absolutely.
Let's see. I had him here a second ago. Marcus asked,
Yeah,
can
no.
you use the Fulgent on all time frames and markets, even Forex?
Yep.
Okay, I figured that'd be
Any
the answer.
tradable chart. Mm-hmm.
He asks, your trend lines, let's see, your trend lines on the chart are rather short. Do you use longer, over a month or even years also?
Mm-hmm. So that's what this column's for here. Short term, medium term, long term. So if you only want to see the long term ones, you would check these boxes here. So right now it's kind of showing a mixture of different things. But yeah, so there are different time frames for sure.
There's one
I
more
prefer short.
question. Mo7 says, what do you do in the case of contradictory patterns occurring on different time frames, such as today I watched NZD-USD, New Zealand dollar to USD dollar, I guess, form a double top on the 4H, but multiple bullish engulfings on 1H to 2H. I don't think I understand that question. Do you?
Oh yeah.
Okay.
So
Of course
we
you
haven't
do.
talked about. Yeah, we have not talked about candle patterns, and those are they're called candle patterns. They're 2-3 bar patterns, sometimes 4. And absolutely, you can see a conflicting candle pattern with something like a support level being touched, like you'll see an bearish engulfing line, right at support level. Well, those are good tools, and it could mean that you're going to break that support level. So if you see a conflict, I just wait or look for another one. But yeah, I mean, it's very common to see that.
Yeah, that was all the questions on the YouTube side. Thank you.
Okay, cool. All right. Well, appreciate everybody being here today to learn about chart patterns and, of course, the tool that we have to identify them. Be sure you go to Fulgent AI to get that book, because that'll help you. I'll bring it back up here. So just fulgent.ai/MetaStock, and you can download that. I don't know, are you going to talk about the specials that you have? Because I think they are.
So Dave's in charge of the video right now, and I'm in charge of the audio. How about that? So, chart pattern engine, the thing we've been talking about the last hour. You can get it for a one-time cost of $14.95, or but today, because y'all endured all this technical madness, you can get it for $9.95. And I'm just going to make sure that all of my audio is on everywhere. Okay. It includes bootcamp training with, of course, the fabulous Ed Downs, who I think you all can agree now is a great presenter and a very knowledgeable human being. To order, you can call 1-800-882-3040 or 800-882-3040. Put the same number in twice. And ask for Dave. Also, if you like, you can go to metastock.com/FulgentCPE. And if you'd like to speak with a sales representative right now, go to metastock.com/saleschat. Ed, is there anything I didn't say?
I think you got it pretty good.
Okay. I want to thank everyone again for attending today. Again, I cannot apologize enough for all the technical issues. But Ed is so very patient, and we appreciate his time. And I know if you give Chart Pattern Engine a chance, you will not regret it. And make sure to give us a call, 800-882-3040. Make sure to ask for Dave. And or go to metastock.com/FulgentCPE or visit metastock.com/saleschat. Thank you all so much, and everyone have a great afternoon.
Yes. Thank you all very much today. Thank you.